Hi guys. Today we will analyze Intercontinental Exchange stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. The stock's overall performance in the market is below average. Also, recent evolutions are not positive. Both the long and short-term trends are negative. There should be more interesting stocks out there. Strong support level is around $92.50. Next strong support level is around $85. Strong resistance levels are around $110 and $122. Next strong resistance levels are around $130 and $137. In the last month the stock has been trading between $93 and $125 range, which is wide. It is currently trading near the lows of this range. The stock has an average volume of 4 million. This is a good sign, as it is always nice to have a liquid stock. The stock has been in a downward trend since March 2022. Be careful. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth, even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Intrinsic values calculations. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. The excess return model. This approach is used for financial institutions where free cash flow is difficult to estimate. Then, we will use valuation based on earnings per share, EPS, 5-year average P/E ratio and expected growth rate. First model. Excess return model valuation. This spreadsheet contains some financial data that we will use for the stock valuation. In this valuation I will use margin of safety. 30%. Once we actually figure out what we think this stock is worth, we are only going to buy the stock if it gets 30% of what we think it's worth. It gives us a big margin of safety if our predictions are wrong. In other words, when something is worth $1, I want to pay only 70 cents for it. I want to be conservative with financial institutions. So, my margin of safety is 30%. According to our formula, the fair value of the stock is $179.44. When we apply the margin of safety to that value, the fair value of the stock would be $125.61. That's the price that I may want to pay for this stock. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for Intercontinental Exchange is 7.2. Minimum rate of return. I will use 10%. Because when we invest in individual companies, we are looking for a higher return than the S&P 500. For Intercontinental Exchange, analysts forecast growth rate around 6% per year in next 5 years, and future P/E around 18. I will use three different scenarios for Intercontinental Exchange Company: bad, average, and good. First scenario. Intercontinental Exchange will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be low, 4%. Future P/E would be low, 14. In this case, the fair value of the stock today would be $61. Second scenario. Intercontinental Exchange will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 5%. Future P/E would be average, 16. In this case, the fair value of the stock today would be $76. Third scenario. Intercontinental Exchange will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 6%. Future P/E would be high, 18. In this case, the fair value of the stock today would be $93. As you can see, today the stock is a bit overvalued, $97, even if we expect the company's high performance in future. The fundamentals are good, but the company is expected to show a small growth in revenue in the next 5 years. Nothing too spectacular is happening here. And the stock is currently a bit overpriced. Also, the stock has been in a downward trend since March 2022. I may consider buying the stock, if the stock drops below $90, and when it shows signs of reversal. Do not try to catch a falling knife here. Company's strengths. Intercontinental Exchange is an American company that, together with its subsidiaries, operates regulated exchanges, clearing houses, and listings venues for commodity, financial, fixed income, and equity markets in the US, the UK, the European Union, Singapore, Israel, and Canada. The company operates the New York Stock Exchange. The company has a stellar business model that comes with strong and rising free cash flow, a healthy balance sheet, and both buybacks and dividends. The company has entered new industries and continues to make strategic investments. With the acquisition of Ellie Mae, the company has the opportunity to benefit from the digitization of the mortgage industry. Intercontinental is benefiting from positive trends in its core data and listings business, including increased demand for real-time data and analytics, the growing popularity of passive index investing, and the need for greater price transparency. The company owns highly valuable proprietary data assets that it has been able to monetize effectively. It has become increasingly less reliant on transactional revenue, as it expands its data and service offerings both organically and through acquisitions. The company's profit margin of 47% is amongst the best of the industry. Its return on equity of 18% is comparable to the industry average of 17%. Risks. The company's performance is affected by changes in equity and commodity prices, as well as by sharp decreases in volatility. The company also has relatively high fixed costs, and would suffer significant margin erosion if trading volume declined sharply and stayed low for an extended period. Intercontinental Exchange also faces intense competition from other exchanges. In order to maintain its competitive position, the company needs to invest heavily in technology and talent, and protect its intellectual property. The derivatives and energy commodities trading industry has been, and may continue to be, pressured by increased legislation and regulatory scrutiny, which could adversely affect trading and clearing volumes, and the overall cost of conducting business. The clearing business faces counterparty risk, as well as increased oversight by regulators, who believe that clearing houses may be a systemically risky part of the financial system. The mortgage business will be a substantial portion of future revenues. Competition is expected to increase as mortgage rates remain low. The company has a return on assets of 2%. This is below the industry average of 5%. The company is expected to show a small growth in revenue. In the coming 5 years, the revenue will grow by 5 to 8% yearly. Based on estimates for the next 5 years, the company will show a small growth in earnings per share. The EPS will grow by 9 to 12% on average per year. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.